Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
About 2 minutes away from the end of the trading day. Caroline Hyde, Taylor Riggs, Katie Greifeld. We're counting you down to the closing bell. Here to take us beyond that bell. It's our global simulcast. Carol, Massar, Tim, Stenovec. And as we go cross-platform, television, radio, YouTube, we go cross-asset too, because it is a wild ride when you're looking at the bond market and indeed the stock market ever higher on the day, Carol.
Yeah, absolutely. And I'm going to steal what Tim was talking about earlier was the semiconductor index, the SOX, on a tear up about 4% or so. I mean, I think there's 6 names in the S&P 500 of the top 10 that are your outperformers, your top performers. NVIDIA at the top, up more than 9%.
Bitcoin also getting a bid today, highest since March 2nd, 2022, climbing to more than $44,000 for the first time in almost a month. This breaking out of its narrow trading range. Look at this, up 3.7% right now.
Gotta wonder how long that will last. I mean, we've been waiting for Bitcoin to break out of that range for a few months now. We'll see if this one sticks. I do want to point out that if you look at volumes right now, they're pretty low. I'm looking at an S&P 500 20-day, 25% below its 20-day average.
No conviction behind the buying, perhaps?
Maybe.
Maybe, right?
All as you continue to see sort of the volatility index, we talked a lot about the VIX migrate southward, I should say, down just a little bit to still in around a 22 or so. Caroline, as you think about some of the volatility within the equity markets, but all of the volatility continues to be within these bond markets as well. That continues as we close in on the end of the session and yields climb near the highs of the session.
And not just the U.S. bond market sell-off, it's a global bond market sell-off. It's a global story today, of course, as President Biden headed to Brussels, the G20, of course, regrouping of NATO. Plenty are gathering as they discuss potentially an exit of Russia from the G20. It was the G7, the EU and NATO that gathered in Brussels. And we managed to power through some of that geopolitical risk, some of those inflation trades, some of that, instead, the economic data that came out strong in the U.S., managing to galvanize the risk attitude. S&P 500 up 1.4%, 64 points higher, shall we call it. NASDAQ currently up 1.9%, 269 points to the upside for the NASDAQ, so big tech wins out. Even the Dow manages to power higher towards the end of trade, almost 350 points to the upside, more than a percentage point gain on the Dow. And let's bring it out. What did the Russell 2000 have to do for the day? Because it was your laggard to a certain extent, but up more than a percentage point too. So clearly there was a feeling that you get into equities in this current scenario.
Yeah, I'm curious too, Caroline, if this is going to continue into the Friday trade ahead of the weekend when we don't know what's going to happen, obviously, with Ukraine. Just going back to the big caps, the S&P 500, breaking it down, 442 names in the index higher today, Taylor, 63 showing some losses.
You know, and Carol, this is an interesting point because we talked about how maybe there wasn't a lot of volume today, but at least as you've mentioned, either the number of names or for here, the sectors, it really does seem broad-based. For the radio audience, we take a look at the sector winners, the sector losers. It is pretty much all green across the screen except for one, which I'll get to. Let's talk about the real big outperformers, Carol. You talked about, right, in NVIDIA, Intel, some of the big tech chip makers that are leading the gains. 2 levels down in the S&P, that semiconductor equipment index is up more than 6% on the day alone. Technology is also up in there as well, up about 2%. We've talked a lot about Apple today and rolling out maybe a subscription service for some of that hardware business. I go to some of the worst performers, and it is still green on the screen. I leave you down to just one sector that's in the loser here, consumer durables. You're off about 0.3%, but overall, maybe despite some of the low volume, it does feel pretty broad-based, Carol.
All right, so you mentioned semiconductors and the SOX and the chip outperformance on this Thursday. So that takes me to the number one performer in the S&P 500, number one performer in the NASDAQ 100, and that is NVIDIA. It is up almost 10%, so pretty much closing at its highs of the session. And guys, it's up like 30% in the past 8 trading days. No real news today, but earlier in the week, we did hear at an updated investor meeting, and they talked about not doing new buybacks, but really investing into new products. But the company still is doing currently buybacks, about $2 billion worth, and has another $3 billion that it can certainly tap out later on this year. I do also want to get to a Chinese ADR here in the U.S. It's a microcap, about a $4 stock here, up about 27%. Lux Venture, it has been all over the place this week. A lot of volatility, and even today we had some trading halting. It was up as much as 66%, so we have seen some major swings on this one this week, but it just was a standout, even though it's a really small player. And then Energy Services of America, we had an IPO today, up about 13%. This was trading, though, in the over-the-counter market, but nonetheless, it's first day of trading on the NASDAQ, and we did see a bump up in that name.
In terms of decliners, let's go back to KB Home. Taylor, you mentioned this a little earlier in the program. Shares down today 4.6%, off of session lows for the close, but still hitting a 52-week low today. The company reported first quarter results that missed the average analyst estimate. Supply chain problems weighing on those quarterly results. Another day lower for Okta as well, down 2.7%. The fallout from that security breach that we talked about earlier this week continues. Shares now falling to their lowest since April of 2020, down for 4 days in a row as it continues with that fallout. And then PDD down 9% today. The U.S. listed Chinese shares slumping today, on track to snap a 2-day winning streak. The Public Company Accounting Oversight Board said it's, quote, premature to speculate about a deal to keep Chinese stocks from being kicked off American exchanges. So that's sending shares of ADRs, Chinese companies, lower today.
On the downside, if we look at FX markets, once again, the Japanese yen just having another dour day, off by 0.9%. Actually, we had members of the Bank of Japan saying, look, maybe this weak currency is no bad thing for Japan overall. Remember, this is a central bank that isn't normalizing anytime soon in the same sort of rate as we talk of the United States doing so. We see instead money moving into some of the commodity-related currencies. We see the Canadian dollar up 0.3%, even though we saw oil pull back a little bit today, but we still have a tear on in terms of metals prices. So Aussie dollar also up 0.2%. We look across to what commodities are up to, and as I say, today was a weaker day for oil. WTI crude up by 3%, 111 is where we are. Brent crude, $117, also down by 3%. Yesterday, though, we saw big moves to the higher side. This is a volatile market. This is one that people are worried about the liquidity that's currently there out on the exchanges for oil. And we're also seeing, of course, a lot of headline risk coming out of Europe as to whether or not Europe could indeed be persuaded to look at further sanctions in on Russia. Iron ore gets pushed up in Singapore, up more than 2%. Natural gas here in the US actually on the higher side, up by more than 3%, even though in Europe we pulled back somewhat as there was some hope that maybe those talk of rubles having to be how you get your gas in Europe, maybe being dialed back a little bit by Russia. Sovereign bonds sell off across the board. Greek yields push higher by 11 basis points on the 30-year. The Canadian selling off. Norwegian, German debt also selling off. What about in US, Taylor?
Same story. Caroline, it is so fascinating when you really highlighted the global nature of this sell-off that continues again today. And I think what's interesting is you think about the move downward in yield yesterday. We're reversing some of those moves, Katie, as we think about where we are today. At least on a 2-year yield, you're recouping some of those. I just remind you where we started the week at about a 211. So we're right back where we were at about a 212, though we ended last week at a 193. And just quickly take a look at the 10-year yield. On Friday, we were at a 215. So we're already all the way back to about a 236. Again, sort of unwinding some of the moves that we had as of yesterday.
And what's really interesting to me, if you break apart what is driving nominal yields, I mean, we know break-even inflation expectations are rising. So too are real yields. So you put those two together and you are seeing that big move higher in yields across the curve. And it's interesting, you did see a little bit of yield curve steepening today, which caught my eye.
All right, so is it too early to start counting down to the next Fed meeting, which is May 4th?
I'm counting down to the minutes.
Or counting down to what we get from the Fed, right, in terms of the quantitative tightening and how that lays out, right? We're going to know a little bit more, I think, in about 2 weeks' time.
Yeah, well, that's what Fed Chair Jay Powell referred to last week when he actually answered a question referring to the minutes when it comes to, plans for the balance sheet. And I think a lot of people are going to be looking to that for clues about how quickly the Federal Reserve is going to unwind that balance sheet, because we know it's not going to be the same pace that it was just a few years ago.
No, it's going to have to be potentially fast and furious to a certain degree, and that is what the bond market's really factoring in at the moment. The question is whether we can execute some sort of soft landing with the economy at the moment. When you do try and tap on the brakes, when you try to perhaps look at equities that continue to soar higher, when you still see people, seeing the wealth effect continue to go ever upwards, even as we talk about a tightening from the Federal Reserve. I mean, how do they slow down this economy in the face of it? The economic data today was interesting. Jobless claims, the lowest since 1969. You did see strong PMIs, but some of those order numbers looking a little bit more worrying.
I think that was a really interesting point, because we did this chart, Caroline, when we were going into Brian Deese about the input cost numbers here that are still near some of the highs that we've seen. As I search for my notes, input prices accelerated to a near record on some of those PMI numbers to 76.8. Selling price inflation has eased just a little bit in the month, but it remains very elevated. And Katie, I think this is when you have a Federal Reserve that sees inflation risk maybe much more so than the economic risk. That's why you have people like Ellen Zentner saying we're looking at 50 for May, 50 for June, and 25 basis points after that, because it's much more tilted to some of the inflationary risks that are putting pressure.
Absolutely, and we know that the Federal Reserve wants to get a handle on that inflation and those input costs that you mentioned. I mean, you know that has to be top of mind for employers. We know the labor market is super strong right now, but if inflation continues to rise as it is expected to, when does it start to undercut that?
Well, and this is something we'll be asking all the CEOs, right, guys, when earnings start in just a few weeks' time.
How are your Cheerio prices doing, Caroline?
Expensive, I would have
Can I tell you, it's free upstairs?
Yeah, I was going to say. I mean,
Yeah, I'm starting to hoard them. I mean, I'm pretty sure that security stopped me doing that.
Not hoard them.
you're not the only one.
It's when
Caroline,
they
don't
start to
worry.
fill up your canister with milk that you really got to get worried.
All right, we got to run. All right, guys, that's going to do it for our cross-platform coverage on radio, TV, and YouTube. We call it Beyond the Bell. We will see you same time, same place tomorrow.